Hello, ladies and gentlemen. My name is Christoph Husmann. I'm spokesman of the board and CFO of Encavis AG, one of the leading owners and operators of renewable energy plants in Europe. We yesterday published our fiscal year results 2023, which again bet our own guidance. Ladies and gentlemen, in 2023, we acquired 1 terawatt hours of capacities, which is 1,000 gigawatt hours, which is 33% above our own target of 750 gigawatt hours. Like in the past, approximately 80% of these capacities which were acquired are provided by PV parks and approximately 20% by wind farms. New is that we did acquire the first battery in our capacities. Ladies and gentlemen, last year we increased the gigawatt hours which we produced within the company by 3.354 gigawatt hours from 3.133 gigawatt hours, which is a plus of 221 gigawatt hours plus 7%. This was driven by a strong increase of our power production in wind, a plus of 25%. This is based on the full reflection of 12-month production of our new 69 megawatt park lithium in Lithuania, which provides 196 additional gigawatt hours of energy production alone. The other developments of the remaining gigawatt hours in wind as well as in solar are on one hand side driven by other smaller new capacity additions and by meteorological deviations compared to previous year. The meteorology itself was in 2023 pretty much on the level of 2022, slightly only below 2022. So both of them not outstanding years weather-wise, neither positively nor negatively. If we look a little bit more into the details, the 7% increase in power production are again backed on these new capacity additions. In fact, if we have a look into our existing portfolio, here we see a decline of the power production by 2%, minus 60 gigawatt hours. As a matter of fact, this is, as I pointed out, in a small extent driven by weather. Approximately half of that deviation is going back to slightly worse weather conditions, which is minus 1%. And the other minus 1% is driven by technological shortfalls of some parks, where we had either some components which didn't work properly, or we had an external input factor which let the park suffer under these conditions, or we had curtailments where the grid was congested and therefore power could not be fed into the grid. In these three cases, we usually get compensational payments either by insurance companies or by the component manufacturer or by the grid operator. But these compensational effects are not shown in the revenues, but in EBITDA, we will see that later. In total, our operating net revenues were reduced slightly from 463 million euros to 449 million euros. This is mainly driven by a reduction of prices, because as we have seen, the gigawatt hour production itself developed positively overall due to the capacity additions, but the power price in Europe came down, and we lost 16% of our revenues in total based on prices and power, but the major part of it, 14%, by prices and 2% by volume. This negative deviation of 12.6 million euros revenues then is reflected in EBITDA, which came down by 31 million euros. These 31 million euros are higher than the revenue difference. Why? Because, as we might see in a later stage, it is that the shortfall of power prices was compensated by additional new capacities which were connected to the grid, by the growth of our service segments. But both new projects and service segment revenues do not come in with the same high EBITDA contribution like revenues which are lost due to a price effect. And so therefore, the gap in the EBITDA is bigger than the revenues. Since we do have lower depreciation compared to previous year in 2022, due to the harsh increase of interest rates, we had some impairment tests of some of our parks that was not repeated in 2023, and therefore the depreciation was reduced, and therefore the high difference of 31 million euros in EBITDA shrinks to just a 4 million euro difference compared to previous year in EBIT. And since that is even more compensated due to reduced interest payments and reduced tax payments on EPS level, earnings per share, we are flat compared to previous year, which from our point of view is reflecting the resilience of our business model, having in mind that we have in total 70% reduced power prices in 2023 compared to 2022, and all of that is compensated down to the EPS. Here we do see the development of our revenues from 463 million euros of net revenues in 2022. We have a reduction in the existing portfolio of 72 million, mainly on power prices. The vast majority is on power prices. And then it is compensated by the growth in our service segments, asset management, third-party revenue of Stern, and new acquisitions coming back to 449.1 million. The 72.2 million of price decline are 100% reflected in reduced EBITDA. But the full compensation of the revenues by the service segments and the new acquired projects only partially compensates that on EBITDA level, because some costs are attached to these new revenues. Well, now that was only negative deviations to the previous year. How does that look compared to the guidance? In fact, in all P&L guidance key figures, we exceeded the guidance. So our net revenues, as well as EBITDA, as well as EBIT, as well as earnings per share, are above or exactly on the guided level. So the decline in power prices and all these technical issues and stuff like that were correctly forecasted by us for this year. Only in operating cash flow, we see a deviation of current figures to the guided figures. As a matter of fact, what happened here? We had guided operating cash flow of 280 million euros and have now realized 235 million euros. On the right-hand side, we see 5 red boxes. Advanced tax payments 2023, which were paid in 2023 based on the high level of tax payments for 2022. The fiscal departments asked us to pay high advanced payments for 2023. We could not convince them to leave that way because in 2023, due to lower power prices, profits wouldn't be as high in the respective parks. But these advanced tax payments won't be repeated this year and reduce the tax payment necessity this year. So therefore, this will be compensated in 2024. The same applies to capital gains tax and sales tax receivables, which we prepaid last year and they will be remunerated back this year. And I pointed out that we had some shortfalls, some technical shortfalls, which are compensated by different parties. They are fully accounted in the EBITDA, but the payment will happen this year. These are the receivables and component compensations as well as the receivables. So having said that, these 20 million euros will fully be recovered in 2024. In addition to that, the second from the left, we had a disposal of some minorities in the last year, and these EBITDA contribution is for technical reason not shown in the operating cash flow, but in the investment cash flow. So the cash is here, but shown in a different bucket. The only real difference to our guidance are the taxes of 2022. They, in the magnitude, were not fully anticipated in the beginning of 2023 because the tax declarations for 2022 were done in the course of 2023, and here we had to accept higher tax payment necessities than expected. These 12 million are the only really lost cash. If we then go into the segmentational report, we see that the solar parks and wind farms are of utmost importance for the group, but their importance is slightly shrinking because PV services and asset management are growing rapidly. As a matter of fact, it is that the operating EBITDA margin is in the asset-intensive businesses, solar parks and wind farms, still on a very high level, above 75% EBITDA margin. The same applies to the EBIT margin, with 46 to 56% is still on the old and high level. So if on group level we have a deterioration of the EBITDA margin, it is only due to the strong growth of the service segments, which by nature do not have such a high EBITDA margin. If we then look into the balance sheet, we see a slight increase, a steady increase of our balance sheet total according to the growth of the company. Of major importance is that the equity ratio is back to 33.2%, reflecting the healthy condition of the company. These 33.2%, coming back from the 28% in 2022, was without any capital increase. It was just based on the keeping in the profit, not by paying out a dividend, and at the same time by a special effect which we suffered off in 2022, which is now gone. IFRS reflection of PPA contracts, power purchase agreement contract, had a technical reduction in 2022 because power prices were extremely high. Now, where power prices are coming back to normal, it is that this equity ratio increases back to 30. Ladies and gentlemen, let's now have a look into our guidance 2024. Like every year, the guidance is based on standard weather assumptions on the current interest rate level, which is forecasted for that year, and based on the power price curves, which we know based on the forward prices in the market for this year. One thing which is fortunately new is no further revenue skimming assumed. As a matter of fact, what we have to have in mind is that although the power prices already came down tremendously compared to previous year, again, between 2022 and 2023, power prices came down by up to 70%. Now they are reduced further. In all countries and all technologies, despite Finland wind, we see a further decline of power prices between 42 and 20%. This is of relevance for our company only for the merchant part of our business. As you might know, approximately 95% of our planned and forecasted revenues are price fixed, 95% are price fixed, and only approximately 5% of our revenues are merchant. So we have a guidance in 2024, which is pretty reliable as it was in the past, somewhat conservative, having in mind that already 94% of these revenues price-wise fully hedged and therefore fixed. We guide, although now the power prices are coming back between 40 and 20% in this fiscal year, we forecast revenues which are on level of previous year 2023, but have a somewhat by 19 million euros reduced EBITDA of more than 300 million euros. Why is that? Again, in this year 2024, by the reduced power prices, reduced revenues are compensated by the growth of the service business and by the growth of our capacities. But since the revenues which are missing due to reduced power prices 101 are reducing the EBITDA, it is that an additional euro of revenues only contributes to some percentage to the EBITDA because usually they are linked to cost. So therefore, with 300 million euros, we have a very stable EBITDA, and with 175 million euros, the same difference to the EBIT of the previous year. In the operating cash flow, we expect a substantial increase by 25 million, again, on the back of a by 19 million euros reduced EBITDA, because as we have seen, there is some shifting of cash in from 2023 to 2024. Ladies and gentlemen, if we then have a look into the segmentation report, we see in the end exactly the same story as in the previous year. We have a slight decrease in solar park revenues due to reduced power prices, but the same high margins as in the past. The wind farms are somewhat increasing the revenues. They suffer from the same power price reduction, but at the same time, higher increase of capacities. There's a slight deterioration of the EBITDA margin due to one-off effect. In 2023, we had a disposal of majority shares in wind farms reflected in these figures, while the PV segment is growing further with lower EBITDA margins, and the asset management is keeping up its high level, but will grow EBIT-wise. Ladies and gentlemen, it is that we stick further to our disciplined and selective investment criteria and deliver high income and returns all across our cycle in the same manner as we did before. As you might be aware, we had announced last year a plan to reach, based from our today's capacities, to have 5.8 gigawatt of capacities connected to the grid in 2027. 2 weeks ago, we announced that we will partner up with KKR and Husmann, which want to take over our company and develop it further. As a matter of fact, with this partnership, we will get financial support to unlock our future growth. And this will be reflected in our new ambition to reach in 2027 7 gigawatt of capacity, which is 1.2 gigawatt more than we had already in our ambitious target so far. Ladies and gentlemen, thank you very much for your audience. Thank you very much for watching this video. Goodbye.